Hello everyone, I'm Kumiko Lee.
I'm Maria Ishizuka.
Recently, because of the development of technology, businesses have the variety and many companies expand their business globally. Companies have to examine the financial results of their business and make decisions to make more profits because the recent business become big and complicated. Financial analysis can make us notice both of good or bad point of their business. We pick up one industry and two companies to analyze financial statement. Our presentation has four parts. The first one is industry. The second is about the company's McDonald's. The third is about the company's Dunkin' Donuts. And the fourth is conclusion. First, I will talk about why we chose the fast food restaurant industry. There are two reasons why we chose the fast food restaurant industry. The first one is there are many fast food restaurants in the world. I am an international student from Japan, so I don't know well about the US, but fast food restaurant exists in the world. So I think it means the fast food restaurant is a common culture between the US and Japan. And the second reason is foods are essential for people to live. Recently, many people are so busy, so they don't have the time to cook. So the fast food restaurant is spread to the many places, and I am interested in the scale of the industry. I will talk about industry. This fast food restaurant industry generates 570 billion sales in the world, and in the US, the sales was $200 billion. This industry is growing every year. So in 1970s, the sales was only $6 billion, but in 2015, the sales became $200 billion. Also, in the US, there are 200,000 fast food restaurants now, and 50 million people eat at least one every day. In Japan, about 480,000 people eat a fast food product at once every day, so the American number is very huge. And also the sector which has the largest shares of the sales is in the fast food restaurant industry is quick service restaurant. This sector generates more than 50% of sales in the whole industry. The company's examples of this sector are McDonald's, Kentucky Fried Chicken, Subway, or Burger King. And it is top 5 largest market shares of sales. The first is hamburger-focused restaurant. It is more than 30%. And second is pizza parlors. It is 50%. And the third one is sandwich restaurant. It is 12%. The fourth is chicken restaurant. It is 8%. And the fifth is Mexican restaurant. It is 7%. The industry is growing every year, but there are some problems. The first problem is that consumers have unhealthy image for the industry. So the company tried to introduce some healthy food like free-range chickens or vegetables or organic ingredients. But against this problem, the new competitors was born. This competitor is named Fast Casual Restaurant, which uses healthy, fresh ingredients. This industry is growing rapidly, and the company example of this industry is Shake Shack. And second problem is low wages. According to the research, 50 of frontline fast food restaurant employees cannot live with the salary of full-time of the fast food restaurant. So the companies try to increase the salaries. And the fast food restaurant industry's culture have the diversity. Recently in the US, the number of the Mexican or Chinese restaurants is increasing. It means the American people accept the foreign cultures. And like other industries in the fast food restaurant industry, due to the coronavirus, QSR sales decreased by 10%. It is top sales of fast food chains in 2019. The McDonald's is ranked at first. The sales was about $40 billion. On the other hand, Dunkin' Donuts was ranked 8th. The sales was $9 billion. I will talk about the company McDonald's. McDonald's was founded in 1948 by brothers Maurice and Richard McDonald's. And when the McDonald's started, the fast food restaurant was not so common. So at that time, the company provided the hamburger with 50 cents, which was the half price of the other competitors. And now there are 36,000 McDonald's restaurants in 100 nations. In the US, there are 10,000 McDonald's restaurants. McDonald's sells 75 hamburgers per minute in the world. And the company has some management strategies. The first is speedy service system. When McDonald's started their business, fast food in restaurant was not so common. So they started this system. It was that they prepared ready for eat food before customers ordered and offered them earlier. This system could sell more products compared with the restaurant which prepare their food after receiving the order. And McDonald's began franchising from 1953. Franchising can make companies get more local resources with limited cost. So it is an effective way for companies to expand their business. And McDonald's does joint venture also. In 2017, McDonald's did joint venture with Chinese companies to expand their business to China, which has the largest market in the world. And third strategy is supply chain management. McDonald's grows its ingredient by owning its beef factories or farms to keep the good quality. And McDonald's also has marketing strategies named 4Ps. The first P is product. McDonald's does detailed market research and knows the changes of customers' needs, customer demand. Then it introduces new menu earlier, which matches the new customers' demand. The second is prices. If the prices are too low, customers are worried about the quality, so companies has to decide appropriate price. Third is advertising. McDonald's focuses on advertising very much by using TV, posters, cinemas, or newspapers which matches local cultures. And it targets children by using Happy Meals. And fourth is places. McDonald's has many restaurants in drive-through or outlet which are convenient for consumers. I will analyze McDonald's financing numbers by using some ratios. The first one is asset management ratio, especially fixed asset turnover. If this ratio can evaluate how effectively the company uses their fixed asset. If the ratio is high, the company can generate sales with less money of fixed asset. If the number is low, the company invests too much. McDonald's fixed asset turnover is lower than Dunkin' Donuts. I think it has some reasons. The first reason is McDonald's introduces the kiosk to to receive the customer's order. The kiosk is considered to computer equipment. So if the net property or equipment increases, the fixed asset turnover decreases. And second reason is that McDonald's decreased net sales recently. It is because some fast food companies like Burger King use plant-based meat, which is healthy and became popular in the US now. So they get more shares of the market. So as a result, McDonald's lost its shares. The second ratio is profitability ratio, especially asset turnover ratio. McDonald's asset turnover ratio is a little bit higher than Dunkin' Donuts, but the ratio is decreasing every year, and because of the decrease of the net sales. But McDonald's net sales is increasing globally, while in the US the net sales is decreasing. I think it is because more Americans prefer to healthy foods. And third is liquidity ratio, especially current ratio. Current ratio can evaluate how companies can pay short-term obligation earlier. So it is useful for creditors. If the ratio is high, the company can pay short-term obligation easily. So McDonald's current ratio is lower than Dunkin' Donuts recently. I think this reason is that according to Morningstar, McDonald's current liability is are flat. On the other hand, current asset is rapidly decreasing from 2016. Especially, cash was decreasing rapidly. I think it is the reason is that in 2016, 500 McDonald's restaurant was closed, so the amount of cash which the companies can get from the customers decreased. And the fourth is debt management ratio. I will compare weighted average cost of capital with return on invested capital. Companies, the ratio can evaluate how benefit creates from the company's investment. If the ROIC is bigger than WACC, company's investment creates value. On the other hand, if ROIC is smaller than WACC, company's investment are too much. Seen from these numbers, both of McDonald's and Dunkin' Donuts are favorable. It means both of the company's investment grow the company's value. And the fifth one is cash conversion cycle of McDonald's. If the lower number means that the company has better condition, I think McDonald's can operate effectively from this number. The final one is market value ratio, especially price per earnings ratio. If the ratio is low, companies' stock are undervalued. It means the company's earnings are uncertain, so it is risky. McDonald's $1 earnings has $25.96 in 2019, while Dunkin' Donuts has $26.6. So the ratio it implies the McDonald's the change of the ratio of each year is flat, and if the ratio is higher, it means companies have a strong position in the market. So seen from these numbers, McDonald's position are stable in the market recently. And McDonald's is a strong position in the market and it ranked top in the American fast food restaurant. It succeeded because it was a pioneer which spread fast food restaurant to the domestic country and even to the world. So, and it continues to generate generate stable large net sales every year.
Next, I would like to talk about Dunkin' Donuts. Dunkin' Donuts Group is one of the most famous donut shops in the world. Dunkin' Donuts was founded in 1950s by Bill Rosenberg, and today there are 11,300 Dunkin' restaurants worldwide. That's over 8,500 restaurants in 41 states across the USA, and over 3,200 international restaurants across 36 countries. According to the Entrepreneur Franchise 500 2019, Dunkin' Donuts currently ranks 3 million customers around the world come to Dunkin' Donuts every day. I would like to talk about their management strategy. Their management strategy is franchising. According to the Entrepreneur Franchise 500 2019, Dunkin' Donuts currently ranks second as the fastest growing franchise in the United States and Canada. As you can see, Dunkin's brands is structured into 4 segments. Company organization structure is like this. Company has 2 brands, Dunkin' Donuts and Baskin Robinsons, and each of these brands have both domestic and international sector, and each of 4 sectors have their franchise stores. And by using franchising, they can expand their business globally and more efficiently. Then I would like to talk about their marketing mix. A marketing mix is price, product, promotion, and place. As for price, Dunkin' Donuts sells their product at a moderate price. Their product's price is basically among $0.99 to $6.73. As you can see in the picture, Dunkin' Donuts allows customers to buy their product every day thanks to their lower price. Next P is product. Dunkin' Donuts also take care about their product. Dunkin' Donuts prepared 1,000 products so they can serve whatever their customer wants. Their products extend from donuts, muffins, sandwiches, cookies, juice, cocoa, and so on. The company tries to meet the needs of customers whenever they come. We can enjoy Dunkin' Donuts products not only in the morning, but also in the afternoon. Dunkin' Donuts stores are... The third P is place. Dunkin' Donuts stores are located in the right place. They come out when we want to some food and beverages. In fact, most of the stores are located the way people go to work from home. Dunkin' service is based on the motto, easy to drink coffee. And stores are located the convenient places so that customers can gain easily access to their stores. In addition, they started a new business which allows customers to eat and drink Dunkin' stuff without going out. By using an original application services, customers can make an order and ask them to deliver. Fourth P is promotion. Promotions. Dunkin' Donuts recently used Instagram for their promotion, like this. As I can see their Instagram account, their advertisement posts are vivid and cute. Today, young people are familiar with social net services. Therefore, using devices like Instagram to inform about their product must result in the positive effect. Then I also wanted to see the Dunkin' Donuts from the financing activities. Okay. How does Dunkin's Brands Group financial situation is like? As I researched the financial data from Morningstar, their revenue is $861 million in 2017, $1,322 million in 2018 and $1,370 million in 2019. The sales is increasing. Dunkin' started Dunkin's Mobile, and it allows customers to buy donuts before they come to their store. This application service also provides information about their product and coupon so that customers can buy their product in a cheaper way. In addition, Dunkin' started to install the system of the on-the-go mobile ordering. These efforts, I think, increased their sales. Now I'd like to see their fixed asset turnover ratio. Fixed asset turnover ratio equals to revenue divided by fixed asset. Fixed asset turnover ratio shows how much companies produce per their fixed assets. According to the graph, Dunkin' has a high fixed asset turnover. Since 2016 to 2018, Dunkin's fixed asset turnover ratio has been increasing. As you can see, however, asset turnover ratio in 2019 is decreasing. Their sales in 2019 is not low, though. Therefore, I assume the decrease of this ratio is because Dunkin' started to have more asset for their next business activities. Compared with McDonald's, which is one of the biggest fast food restaurants all over the world, Dunkin' Donuts has higher ratio, which I can say Dunkin' Donuts business activities are more efficient than that of McDonald's. I'd like to analyze companies. I would like to analyze companies' efficiency through the date sales outstanding. DSO shows how long does it take for companies to collect their payment after they have sold their product. Based on the time value of money principles, based on the time value money principle, the longer the DSO is, the better. As I can see the graph, Dunkin's DSO in 2019 is 20.24, while McDonald's DSO is 40.4. This means Dunkin's collects noted and receivables twice earlier than McDonald's does. I believe McDonald's has higher DSO. That is because they work with a greater number of companies than Dunkin' Donuts, and a greater number of exchange are there. Dunkin' Donuts DSO is not so fluctuated. I assume there are some device of them, not to extend their collection period. Now I'd like to see their profitability through asset turnover ratio. Asset turnover ratio is a measurement of profit companies have produced through their business activities per their total assets. High asset turnover ratio means company's business activity is profitable. Dunkin's asset turnover ratio is 0.37 in 2019, which is the highest score of the past 5 years. Dunkin' is said to have increased their profitability. However, compared with the ratio of McDonald's 0.52 in 2019, Dunkin's asset turnover ratio is low. Dunkin' has the more potential to improve their profitability. Now I'd like to see their liquidity ratio. According to the ratio from Morningstar, Dunkin's current asset ratio is more than 2. Dunkin's current ratio is 2.979 in 2017, 1.51 in 2018, and 1.56 in 2019. Conservative policy companies' current ratio is more than 2. Therefore, Dunkin's financial activity is basically aggressive. Conservative policy company has less risk, but tend to have less possibility of growing up more than we expect. McDonald's current ratio is 1.84 in 2019, 17, 1.36 in 2018, 0.98 in 2019. Compared with McDonald's current asset, Dunkin's current asset is high, which means their business activity is more conservative. I'd like to see their debt management ratio. Return on invested asset is the amount of return a company makes above the average of cost it pays for its debt and equity capital. And weighted average cost of capital measures companies' cost of borrow money. According to the Group Focus report, Dunkin' Brands Group generate higher return on investment than it costs the company to raise the capital needed for that investment. It is earning excess returns. A firm that expects to continue generating positive excess returns on new investments in the future will see its value increase as growth increases. When ROIC is smaller than WACC, companies invest too much. Therefore, Dunkin's amount of investment is said to be moderate. Now I'd like to see their price-earning ratio. Price-earnings ratio equals to price divided by earnings per share. This ratio is used to know how much value are there per company stock. Dunkin's price-earning ratio is 26.6 in 2019, although this ratio dropped down to 14.61 in 2018. McDonald's price-earnings ratio in 2019 was 25.93, and that of 2018 was 26.86. Therefore, Dunkin's profit earnings ratio is moderate. I'd like to finish this presentation. Both McDonald's and Dunkin' Donuts have reasons for their company success. There are many tips. First, their organization system is better. Interesting, according to Finance 500 ranking, McDonald's is in the first place, followed by Dunkin' Donuts. As a result of their franchising business, they can increase their number of restaurants both in states and upstates. Today, both companies are popular fast food restaurants around the world. Second, their marketing mix divides from customers' point of view. They are conducting their business taking care about 4 P's: price, place, product, promotion. In order for their customer to enjoy their food, McDonald's started Uber Eats project, while Dunkin' Donuts started to deliver their food to home. Finally, their stable financial activities. In total, their financial activity is stable. McDonald's showed the decrease of their productivity and efficiency, but it is not the abrupt change. Dunkin' shows their profitability and efficiency has been increasing. Although there is fears of coronavirus and nobody can expect how ratio will change in the future, McDonald's and Dunkin' Donuts can get over this hard time by their unique and new way. And these are references. Thank you for listening.